Good morning. Welcome back to the Broadcast Retirement Network. I'm Jeff Snyder. This is BRN AM for Thursday, June 17th, 2021. And our top story today, drivers are hitting the road again. What's that mean for auto insurance? Well, joining me now to discuss this and a lot more is Janet Ruiz of the Insurance Information Institute. Janet, it's great to see you. Thanks so much for joining us on the program this morning.
Thanks for having me. I appreciate it.
Yeah, and I love the background. I love having the Golden Gate Bridge in the background, a very stunning sight. So speaking of cars, bridge allows you to cross water. Let's talk about how the auto insurance industry in particular has fared during this pandemic. How have they had to adjust their business practices given that we were driving a lot less?
You know, the auto insurance industry really responded quickly to the pandemic in several ways. One way, which is very significant, they gave back almost $16 billion in premiums to folks who were driving less. And that was significant. The other things they did was giving to charities, making sure people were getting the necessary things they needed during the pandemic. This was quite the time in our history, as we all know, and no one was left ineffective. So I felt like the auto insurance industry really did try to give back, and then also to help their employees. You know, a lot of claim adjusters, underwriters, call center employees, all had to go virtual and work from home. And this was, quite an undertaking by all these companies. And they really rose to the challenge and worked to help their employees during this difficult time as well.
Yeah, and you bring up, I just want to drill down real quick on the call center, the challenges of moving everyone virtual. That is not just a insurance industry issue. That was across the board. People are going to have questions. They're going to have questions about what their premium payments are going to be. What premiums are they going to pay? Are they going to get some level of money, returned back to them because they're not driving as much, but they're saying they're paying the same premium? Really an amazing effort, I have to say. And I know you highlighted that, but from my perspective, as someone who was dealing with an auto insurance provider, auto insurance company, people really stepped up there.
That's correct. And I feel like the employees themselves really did an amazing job because, they may have kids at home on Zoom trying to go to school, other family members trying to work. So it was a big undertaking on everyone's part, but I think people rose to the occasion and did a great job.
Absolutely. So let's talk about reopening a bit. Here we are, we're past Memorial Day, the unofficial start of summer, even though summer starts on the 21st, I guess is the equinox. People look like they're going to be driving a bit more. We have places around the United States opening up. People able to get out on the road. What does that mean for auto insurance rates? Because I feel like we were kind of locked into where we were and didn't have the opportunity really to look at the insurance pool and look at some of the operational aspects of running an insurance pool. What does this mean overall for insurance rates going forward?
Well, it's a dynamic process, and we don't change the rates, too often. What happens is each company works with the Department of Insurance in each state. So that's 50 different Department of Insurances. And they may not change the rates. They only ask for rate changes if they're necessary. So the things that drive an actual change in rates would be oftentimes, the cost to do repairs, if that goes up or down, the amount of accidents that are happening on the road, et cetera. So what we saw last year was a lot of returns of premium because people were driving less. But premium is different than that's what I pay for my insurance. But a rate is what the insurance company has filed for with the Department of Insurance. And those are usually based on, again, the frequency and severity of accidents. We did see the severity of accidents go up during the pandemic. When the phenomena that happened was as there were less cars on the road, the ones that did get on the road took the opportunity to speed. And so we did see more severe accidents. But overall, we had less people on the road and less accidents. So the insurance industry will look at, what's going on. Is there an increase now with people back on the roads in accidents? Or maybe they're slowing down and behaving better. We'll have to see what happens there. And we have to see how quickly will people get back on the road. What I'm sensing is lot more people on the road again. That's what I'm experiencing here in the San Francisco Bay Area, but not to the levels it was before. And we're noticing that companies are re-entering the office spaces slowly. A lot of them are allowing their workers to do hybrid, where they come in a couple days a week instead of 5 days a week. So we'll have to see, how that timing plays out, and that'll determine some of these type of things that we're talking about. One thing that's really important for each individual to do, though, is let their insurance company know how much they personally are driving. So if you end up, I know people who move to another state and will be working from home forever. If that's you, then you need to be sure to let your insurance company know, because then your premium will be less, because one of the factors that determines how much you pay for your auto insurance is how many miles you drive. So very important to keep in touch with your insurer on how many miles you're driving.
Yeah, that's really, really good advice. And I think a lot of people probably haven't even thought about that if they relocated or if they are working remotely. Last questions for this segment, Janet. We've seen an increase in gas prices. Is there a relationship at all between either direct, indirect, related to some of these increases in gas prices versus the premium or the cost of insurance? I would think intuitively, just in my simple brain works, is that if I see high gas prices, I personally may not drive a lot, and therefore that might be an opportunity for me to what you were talking about before, lower my premium because I'm not using the car as much.
That's one possibility. Gas prices generally don't impact your premiums for insurance. The only remote possibility is if the price of auto repairs goes up because the price of parts goes up or something, but that would be very indirect and would take quite a while to come into play. So generally speaking, no, the price of gas does not affect your premium that you pay for auto insurance.
Yeah. Well, Janet, I need to take a very quick break. And when we come back, we'll talk to Janet about tips and tricks to get the best insurance rates possible. You're going to want to stay tuned right here on BRN AM. Imagine a new television network that will make you richer, healthier, and in control of your financial future. This network is for the policewoman in Nashville, Tennessee, the baker in Dubuque, Iowa, the teacher in Lexington, Kentucky. We want to make the idea of savings and retirement culturally relevant. But what do you see as a defining issue of the midterms? Especially for the smaller businesses. I mean, they are the lifeblood of the American economy. Featuring exclusive interviews, current affairs, and docuseries. 33 years old, you retired early.
The philosophy is money only matters if it helps you live a life that you love.
But you got to start thinking about retirement as soon as you get in.
The Broadcast Retirement Network will drive very high engagement with premium partnerships. So this isn't retirement and savings for your parents or grandparents. This is for all Americans. And we're going to change the way you think about money. Welcome to the next frontier of retirement and savings. This is BRN, the Broadcast Retirement Network.
Are you stuck with a low credit score? A credit report and score that's causing you to be denied credit or pay higher interest rates than others for the same things? Then do what Terrence did and call Credit Repaired for your free credit evaluation to help restore your credit.
I started thinking about buying a new house, and my score wasn't where I needed it to be. I called and spoke with one of the representatives, and we just had a good conversation, and I liked what he was saying.
Just one call for his free credit evaluation was all it took to start back on the track to repairing his credit.
I'm seeing the deletions and I'm getting the report, so I know something's being done. It does make a difference to me.
All it takes is one call to get started.
Credit Repair has given me a second chance to have a better credit score.
Don't let a low credit score hold you back another day. Do what Terrence did and make the call for your free credit evaluation.
Call 800-819-4152. That's 800-819-4152. Again, 800-819-4152.
Welcome back. We're talking to Janet Ruiz of the Insurance Information Institute. Janet, thanks so much for staying with us this morning.
Thanks again for having me.
Yeah, this is very timely. As I mentioned at the beginning of the first segment, people are hitting the road and it's officially summer, almost unofficial, official summer. People will be hopefully hitting the road, and certainly things to consider would be car insurance. You already hit on some of the aspects that go into determining car insurance, but just to kind of recap, when someone is going to pay a premium, what factors are in that cost that people ultimately pay?
Well, the three most important factors are your driving history, your record, and how many miles you drive. So you want to be sure that you are driving safely. It's always less expensive if you're not causing accidents. And that's part of your driving history and record. How long you've been driving. Again, how many miles you drive. So those are the three most important factors in most states. Now we have 50 states. They have different regulations. Some will allow gender, age, other factors to be used. Again, the type of car that you're driving. We have those IIHS safety ratings that you see advertised in a lot of car commercials. Those also make a difference. So driving a safer car is good for you and good for your insurance.
And also there are different ways, and I think we'll talk about insurance rates and premiums in a second, but there are different levels of coverage that you can get, whether it's bodily harm, at what level you have to pay before the insurance kicks in. A lot of those things allow you to adjust your premium as well.
They do. So when you go through and pick your insurance, if you have a newer car, you're going to want to have comprehensive collision. You're going to want to have high liability limits. And that's the amount you're going to pay out if you hit someone else. That's what you're responsible for. But one way to keep that a little bit balanced is to have a higher deductible. And that's the amount of money that you pay before the insurance claim kicks in. So a lot of people will balance that and think about what you can afford. Can I afford $1,000? Um, Insurance accidents are never planned. So would it be a stretch for me to come up with 1,000? If it would, then you might want to have a $500 deductible. But if you can put it in a rainy day fund, then have $1,000 or higher deductible, and then you will pay a little bit lower premium on your insurance policy.
Yeah. And you mentioned the rainy day fund. We have often talked about the emergency savings aspect of this. I think we learned a lot from the pandemic about putting money away. And again, this is something why you would want to have that emergency fund so that you could pay things like a deductible, or if you had to get your car repaired, or if you had to, had to buy some parts for your car.
Right.
Janet, you mentioned in the first segment that, obviously we have 50 states, we have 50 different insurance commissions. How frequently could rates change? And, based on, obviously there's going to be some level of risk assessment, I would assume, done by insurance carriers once we get back on the road. But what's the frequency? Is it annually? Is it semi-annual?
Oh, no. There's the rates that they file with the Department of Insurance. That's a lengthy process, so that doesn't happen that often for each particular company. So no, it's not even on an annual basis. It's only as needed. And then your premiums that you pay, those, if your policy is a 6-month term or an annual term, then they could go up or down. Like, say you drove less during the pandemic and now you're going to be working from home. So you call in and say, hey, I'm only driving, 6,000 miles a year now. Then that could lower your premium. And if you were one of the ones that was out there speeding and getting in accidents, that driving history might increase your premium. And that would happen at renewal. It wouldn't happen, midterm. So if your renewal's every 6 months, then your policy would be looked at every 6 months. And if it's every year, then every year. And we talked about a couple of things. We talked about deductibles. We didn't talk about some of the things you can do, like if you have teen drivers, you can have them take safety classes. And what you should do is check in with your insurance agent and ask them, what are some of the discounts you offer? If you're a senior, and I know this is the retirement network, if you're a senior, you may be able to take a safe driving course online that would actually lower your premium. Again, we talked about safe cars. So if you have cars with safety features, that may also lower your premium. So there are many things that you can do to control it. Driving less mileage, again, we've talked about quite a bit, but it will lower your premium.
And Janet, in terms of shopping for car insurance, you mentioned the renewal period. Every 6 months, typically you get a new rate. Is now a good time, based on history, if you didn't drive very much and you don't intend to drive much going forward, is now a good time to go out and use some of the tools that are out there with some of the major providers or providers to shop rates, to shop premium?
I think many people do shop. Other people like their company and aren't interested in shopping. So you can either shop or you can check in with your particular company. If you have your home and auto bundled together and maybe even a small business policy with one particular carrier, and you have loyalty discounts, you may not want to shop. You may just want to check in and say, hey, are there any other discounts that I haven't taken advantage of? But if you're not that entrenched with one carrier, then sure, you can go online. It's very easy now to find out what other companies have to offer. And one other thing that I didn't mention is all the telematics devices. A lot of times that's either an app on your phone or something you plug into your car. You can get a discount there by driving safely and using one of those devices. The good news is on those is then your carrier knows, hey, Janet Ruiz, good driver. They don't have to go as much by, how old are you, how far do you drive, et cetera, et cetera. They can go by the fact that I actually am a good driver. And they're monitoring my behavior. Those devices are also really, really good for new drivers. So if you have a teen or a recent grad, that just getting out of high school, that's just starting to drive, putting those type of apps will train them to have better behavior and be a better driver. And those often you can get a discount with your insurance premium as well.
Well, Janet, excellent advice, and I use one of those Bluetooth devices to track our we don't drive very much, but track our usage, and we found it to be really helpful. And that data, as you said, really important. Janet, we're going to have to leave it there. Really appreciate you coming on the program, sharing some insight, and look forward to having you back on again very soon.
Thanks so much.
And that wraps up this episode of BRN AM. Have a topic of interest, someone you think we should talk to, drop us a line. And don't forget, for all the information in retirement markets, technology, personal finance, so much more, check out today's edition of our daily newsletter, The Morning Pulse. We're back again tomorrow for another episode of BRN AM. Until then, I'm Jeff Snyder. Stay safe, keep on saving, and don't forget, roll with the changes.
Are you being audited and do you owe the IRS $10,000 or more in back taxes? Is the IRS threatening to take more of your money? Don't fight the IRS alone. The Tax Doctor is here to help you negotiate your tax bill and reduce your stress. The IRS can freeze your assets and seize your bank accounts, but you can stop these IRS actions. The Tax Doctor will work with you using our years of experience to represent your case to help you get the best resolution under the IRS guidelines. Help is here to deal with the IRS to reduce your stress. We've handled thousands of cases, so we know what we're doing. If you owe $10,000 or more in back taxes, do not call the IRS alone. Call a Tax Doctor now for a tax emergency analysis.
Call 800-224-6439.